Hello, everybody, and welcome to Hash Rate. My name is Mark Jeffrey. My guest this morning is the mighty and powerful Bill Barhydt of ABRA. So, hello, Bill. Welcome to the show.
Hey, good to see you, Mark. Thanks for having me.
Good to see you, too. So, thank you so much for doing this. I honestly do believe you're one of the smartest guys in the space. So, I've been very anxious to have you on the show, and thank you so much for doing it.
Well, it's a pleasure to be here. Let's get into it.
Okay. So let's talk about our good friend, Mr. Gary Gensler. It does feel like, over the course of 2023, we've seen just sort of attack. I almost feel like Picard waking up going, damage report, every morning just to see what the guy has done, right? And it does feel like an intentional attack. It doesn't feel like, he's actually trying to protect people. It feels like he's trying to shut it down. What is your opinion about that? What do you think about what's going on right now?
So there's a lot of moving parts here. All right, let's break it down. Let's understand the political dynamics, the legal dynamics, and there's also a component to this that we brought on ourselves. So let's break it all down and see where we end up. So first of all, the SEC is not a standalone entity. It's not its own government. All right, it reports to the House Financial Services Committee, Senate Oversight Committee, Maxine Waters, Elizabeth Warren, AOC. These are all people that eventually you have to roll up to and report to. Excuse me. And there's a lot of politics there, right? And let's call it what it is. I do think that Chairman Gensler wants to be Treasury Secretary. I do think that the people that would let's say bless his rise to that role, assuming that that the president would even want that, want somebody who is pro big government, pro liberal. And I'm not bashing either one. I'm just saying that's what it is.
Yeah.
And I don't know how he personally feels, but he's certainly towing that line. I think that if Elizabeth Warren and Maxine Waters call him and say, do X, he does X, whatever it is. Now, they've been against crypto from the beginning. I believe that if Maxine Waters could take a wand and go, hoof, 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 and no more crypto, there would be no more crypto.
Right.
Now, fortunately, she can't do that. All right, thank God. And I don't think he thinks that, but I think he is going to do what he has to do to become Treasury Secretary. That's, I can't prove that, but that's my gut. That's my gut feeling.
Yeah.
Okay, now, let's relate this to day at the SEC, because the SEC is not one person, right? You can't. At the end of the day, there's only so much you can do. If somebody's in enforcement, and you go to them and say, bring an action, and the company has clearly done nothing wrong, at some point you're going to get significant pushback from your lawyers who don't want to put themselves out there. For companies that actually fight the SEC, the track record is actually pretty good of winning. The problem is that nobody wants to fight the SEC, and who could blame them, right?
Right.
So I read a report yesterday that said that the vast majority of cases that have gone to the Supreme Court against the SEC has lost. Okay, so meaning that we have rights, people have rights. They are not a. It's not a dictatorship. Okay, so now,
but it just feels like it feels like if Gary can kind of do anything he wants, who stops him? And I just don't understand this. I know he's got congressional oversight, but it feels like they just put him in a chair, they yell at him for a little bit, and then he just leaves and goes and keeps doing the same thing.
Because every company does the same math, which is, yes, you can go out and file. You don't like me. You don't like this interview. I'm going to go sue Bill.
Yeah.
Okay? There's nothing to stop you from doing that. Nothing. Now, it could be the most ridiculous lawsuit that anybody's ever seen, and you and I are going to get pissed at each other, whatever, all kinds of name calling. And then a month later, somebody's going to say, do the math on this. What is it going to cost for this to go away? Right? And Kraken is a case in point.
Yeah.
I don't know if Kraken would have lost that case that they were offering a security to do staking, but it was clear that it was cheaper in their minds to pay to make it go away.
Pay the protection money, in other words.
Yeah. And so as he's bringing all of these lawsuits, whether it's Gemini, Genesis, or Paxos or whoever it is, it costs him nothing. Right? The enforcement lawyers are a fixed cost. It costs him absolutely nothing, because in 9 times out of 10, there's going to be a settlement that looks like a win, even though the companies admit to nothing.
Right.
Okay. So that is easier than setting guidelines that they have to live with, because once you create guidelines, meaning here's how you list a security token, here's what's a security, here's what's not a security, here's how you build an ATS for crypto, all the things, or here's how you run a swap execution facility, which, by the way, they were supposed to legally mandated to give us rules for 10 years ago, post Dodd-Frank, and never did, because they don't want it. They don't want retail folks trading derivatives. So if they put a stake in the ground and said, here are the rules, here are the guidelines, that limits their ability to do what they're doing now, which is basically just send out notices, start suing people, do issue subpoenas, and knowing that unless you reach a certain size, you can't fight. There's no way.
Right.
And so that's where they're at. And I think there's a combination of the politics, the abuse of the enforcement model, which has to stop. I don't know how.
What's going to stop it, though?
I don't know.
I don't see a way to stop it.
The irony of this is, in the same way that the vast majority of these things don't protect Joe Public, right? Joe Public also doesn't understand how the system is being abused. So it goes both ways. Right?
Yeah.
So there's no politics around fixing this that I can see. It's just it's going to be a never-ending abuse of the enforcement system.
So
I don't know.
This is crazy.
I'm not an expert in the Food and Drug Administration or other regulatory bodies that have a lot of power. If they have this kind of abuse, I really don't know. But I'd be surprised if the SEC was alone in this regard as a regulatory body. I really don't know. I mean, I have no experience with the FAA or the FEMA or any other bodies that basically exert power potentially through enforcement actions. I don't know, but I don't have a good answer as to what makes this stop. I just know why it's happening. Now, we made it very easy for them the last 6 months. And I say we, I'm
not you and
crypto
me
as a space, but the broader space of nuts that is basically committing fraud, dealing with bad actors, saying they're doing X and printing tokens in the basement to fund yield, and all this other shit. And until that stops, we're going to continue to make it easy for them. So, I remember as a kid, I watched that movie Liar Liar with I forget the actor,
Jim Carrey, I think. Yeah.
And the client gets on the phone and he's in trouble again. What should I do? And he says, stop breaking the law, asshole. And I kind of feel like we need a little bit of that. This transcends crypto, right? Whether it's savings and loan or long-term capital management or now FTX or Bernie Madoff, the fraud transcends the product in financial services. And so we need to dilute the bad actors with an army of good actors who are fully committed to doing this right.
Yeah, I do agree with you on that. So we did kind of, as an industry, shoot ourselves in the foot. And I think, from my perspective, I felt like there are a lot more bad actors out there than I would have ever guessed. I thought, without naming names like Mashinsky and, and FTX and SBF, there were probably 5 or 6 people that I didn't think they were the best people on earth, but I didn't know the depth of their financial depravity until all this stuff started unwinding. Right, that really surprised me. So, but I guess in retrospect, wherever money is involved, I shouldn't have been surprised. So
it's not all. And to be honest, it's not all depravity. It's also just big mistakes. My gut feeling is, for example, BlockFi was not a fraud. They just made some really, really poor risk management decisions, like around the grayscale, arb trade, which really wasn't an arb trade, which is why we never did it. But that wasn't fraud. It was just kind of dumb, and so that's not illegal. Being dumb or having poor practices is not illegal.
It's not illegal,
and it's not fraud. But still, we need to dilute all of this with people that know what they're doing, and I think that's going to happen.
I think the other lesson I learned was that I'm a big fan of DeFi. I don't know how you feel about it, but the entire
I was just about to go there.
Okay, yeah. The entire DeFi space, right? It survived this multiple black swan environment and massive worst case scenario stress test, and it worked perfectly. And it unwound. It unwound. It didn't break. There was no fraud, and it was transparent the entire time. So the positive news is that stuff all was great. Did you agree with that?
I do. A couple of things, right? So one, it's still early with DeFi. Two big issues. There's still a lot of protocols that don't get tested well, end up in rug pulls. People lose money there. That's going to continue to happen. But the stuff that's stable and been around is working really well, to your point. It's not as liquid as the CeFi environment was, but that's okay. It's getting there. We're getting tremendous inbound interest now. People saying, okay, how can we earn this yield using DeFi? Now, we still have the big corporate entities. When you say DeFi, they're like, they don't want to hear about it. Even when you explain to them the discussion we just had about the bad actors and the fraud and everything else, they're like, okay, I'll just over collateralize and we'll park the collateral at a major bank, and I'll take half the yield, right? I get it, right?
Yeah.
But that's not the future. It's not, all right? It's just a question of what is the time frame to get to the model where everything is smart contract based. Go back to what happened in Celsius. The court was basically telling them to stop everything. And the one thing they had to ignore the court on was paying back this loan through this DeFi protocol because they were going to get liquidated if they didn't. And they ignored the court, paid it back. The court realized what they did, and they said, "Okay, we get it," right? And that's the whole point. You can't stop it, and that's the way it should be, right? No closing hours, no negotiation, very difficult to commit fraud, et cetera, et cetera. So that is the future of lending, of FX, of trading, money movement, in my opinion.
Yeah, I agree with you fully on that. Going back to Gensler and these other things, I wonder. It does feel like Gensler is trying to put the chokehold on the mechanisms that make DeFi work, right? So you've got so basically stablecoins are clearly one part of the equation. We absolutely need them, and something like Curve in order to make the rest of the machine work. And, if all the major stablecoins, if there's some problem with all the major stablecoins and we're limited to just USDC or something, that feels like it really shrinks the possibilities of DeFi.
It is a problem. It is a problem because even DAI is mostly collateralized in
USDC,
Tether, whatever, which are ultimately centralized with an off switch. So we don't really have a decentralized algorithmic stablecoin that you really can't shut off, like I said, because you could, in theory, go back to an ETH-based model, but the collateralization rates would be so high to deal with the volatility, it doesn't make sense. So ultimately, the best stablecoin we're going to have is probably Bitcoin. But even then, Bitcoin doesn't interoperate with DeFi very well, and you have to get wrapped Bitcoin, which means you're trusting BitGo. I love the BitGo guys, but another centralized entity. So there's still a bunch of holes in the D part of DeFi that we haven't quite figured out yet. At least we have interim solutions which involve centralized services like Circle and BitGo and things like that, which is fine for now, but we've got to do better. And we will. We will do better. Ethereum may become that stable asset for DeFi and use bridges to other protocols over time, where Bitcoin sits alone as gold and Ethereum becomes the stablecoin at scale. We're not there yet, but I can see that happening in 3-4 years. Yeah,
that's an interesting thought. I do wonder whether do you think that a fully crypto native, purely algorithmic stablecoin is possible? Is there a design out there? Do you think that might work? I mean, it's a good question, right?
It's a great question, and I think about it a lot. I've written about it. It's very hard, very, very hard. When Luna failed, I wrote about this, and look, we had the first kind of algorithmic stablecoin at ABRA. That's how we were doing money transfer based on Bitcoin, but it wasn't algorithmic in the sense that it was smart contract based. We were the smart contract, and so it was very expensive to run because of the volatility of Bitcoin. It's going to be hard. I think there's a better chance for Ethereum to become the stablecoin of smart contracts than there is for an algorithmic stablecoin to develop out of thin air that doesn't require fiat in a bank account. And there's just too much inherent volatility in the model. The only way, if Ethereum becomes super stable, so you don't need to create some Luna shitcoin, right?
Yeah.
And you use Ethereum as the underlying peg at massive scale, the math works, right? Day to day. At the edge, when things break down, that's the problem. And once it only has to break down once, right? So day to day, you could use Ethereum. Even today, you could probably use it for quite a while. The question is if there's a huge crash, how does it work, right? And so I would not bet on having a truly stable algorithmic stablecoin in the next 3 years. It doesn't depeg massively at some point.
Yeah, I just wonder whether there's a clever design or not. And I, like you, I've spent a lot of time thinking about this and examining all the different attempts. So I spent a lot of time digging around with Bean. There's a bunch of them that are out there. And I actually like a lot of what I see.
There's some Solana folks working on this too, and folks are going to keep trying because there's money to be made, right? I mean, if you can earn yield, look at Circle. I mean, they're printing money. It's a scale game, right? So pardon the pun, they're printing money, but it's a scale game, right? Because the yield curve for this stuff is going to merge eventually with, the traditional yield curve, and maybe be a little bit higher because the rates aren't artificially deflated like we have to service the debt. But still, it's not going to be the 18% that you were making in the early days of BlockFi.
Right. So you mentioned Waters and some of these other people in Congress. We have a new Congress now, right? So we have new people taking the lead, like Emmer and Lummis and McHenry. In fact, McHenry's the new Waters, right? So we have new people that are sort of more sympathetic to crypto and understand it better, frankly. And they appear to be making moves that are positive. Just this morning, one of them, right before we got on this podcast, one of them announced a new bill caging centralized bank CBDC, centralized bank digital currencies, basically saying they can't be used for this, they can't be used for that, all the horrible things that we know that they could be used for, and that I mean, I've never seen those kind of bills come out of the other side, and so I'm more hopeful that these people will proactively make our environment better. What do you think? Do you think there's more hope now or not? Practically, I'm really bad at New Year's resolutions, but I did make one to limit my sarcasm this year. Yeah. So I'm mostly successful. So this is not sarcasm. I do think that the fact that we have gridlock again is probably our saving grace for at least a while. Yeah. Because, when it's one party in power, the idea of do no harm goes out the window, and who knows what they would do. So I think we have gridlock right now. They're going to be focused on the debt ceiling for the next few months. I think it comes to a head in June or July. They may try to throw some of this stuff in a debt ceiling bill of some kind. I hope not, but it's possible. I doubt it. I think we're safe for at least a year. I could be wrong on that, but I just think that the gridlock of having a divided Congress has saved us for a while. I think that it's not all rosy though in the other party, right? So there are several members of the Republican Congress that are pro-Bitcoin that don't understand DeFi, don't understand smart contracts, are kind of maxis because they've been basically spoon-fed that perspective. And kudos to the folks that were doing the work, I guess, to spoon-feed them that perspective. We need to undo that. And this is all software at the end of the day, right? Yeah. Use it or don't use it has always been my mantra. It's software.
There's nobody who puts a gun to your head and said, use the software. Now, if we end up with a CBDC, that's a different thing, because that is putting a gun to your head and saying use it. But I think that that's probably the biggest risk to freedom vis-a-vis crypto that I can see is the central bank digital currency model. And what China's doing is an absolute disaster for the planet. And it's going to be a war. Part of the war is basically going to be information based, and we see it now with Ukraine and Taiwan, Russia. What happened with the Middle East oil. The world is being asked to start to choose sides, and choosing sides is going to be partially driven by banking, lending markets, bond markets, and eventually these currencies. And I wouldn't be surprised if we start seeing sanctions flying to say you can't do this or that with the US if you're adopting the digital yuan, for example. Would not be surprised at all if in the next 2 years we have something like that. Especially with the next election cycle where the extremists tend to come out in the primaries. The anti-China sentiment is going to be raging in the next election cycle. Guaranteed, right? Some of it deserved. Some of their business practices, they owe us so much, in my opinion. We basically finance bringing 500 million people out of poverty. We never hear about that.
Right.
And our great grandkids finance that, as far as I'm concerned. Now, that may not have been the best, smartest thing we ever did as a society, but it's already done, and those people are out of poverty, largely on our backs. And so why we're not closer, and why we can't figure this out, kills me, but it's dangerous. It's really dangerous, and I think the rhetoric is going to get ratcheted up to 9 in the next election cycle.
Yeah, I think just to be very sort of clear with the CBDC danger thread, for those who don't know, who are watching this show, centralized bank digital currencies could be basically issued by the state, but sort of crypto. They're sort of crypto, sort of not. They're centralized, so not really crypto. But the idea is that it's money that, it's programmable, but possibly for evil. So, you could get dollars that say, you have to spend me in the next month, or I vanish from your bank account, or you tweeted the wrong thing. So sorry, your credit card's declined until you delete the tweet, or you've gone above your carbon footprint for today. So nope, sorry, you can't buy meat.
Right. Or in China, your social score goes down to this level, and you can't do X, Y, or Z, or you can't get a loan, or you can't pay on credit, whatever. Or then the B2B side and supply chain, and it's a mess, or it's a potential to be a mess. Yeah. And the basic human liberty issues that arise as a result of this versus paper money are truly frightening.
So I just gave a talk at Upfront Ventures to the LA CEOs group last week, and I was surprised by the sort of vibe from these people who aren't really in the crypto world was, the central bank digital currency thing sounds really good, because that's like a government version of the bad crypto people's Tether and like all those dirty things, right? And their view is that this is better for everyone, and they don't realize the sort of nefarious potential abuse power just baked into this stuff. And so that's why I wanted to really highlight it, because it seems like there's a lot of people who don't understand that.
I think that privacy, security, the problem with those concepts are until it's an acute problem for you, you don't understand what the implications of not having it are. Right. If you've ever been strip searched in an airport, and I know I have friends who have been for no reason. If you've ever had your bank account closed in a Argentina or Turkey or wherever, Venezuela, and your funds confiscated, if you've ever had your online communications monitored and been arrested because you were running Tor, this may not be happening to the people you're alluding to, but it has happened to millions and tens of millions, actually, of people, probably hundreds of millions of people on the planet. And what makes your rights or anyone else's rights any more important than their rights? And I would say nothing. And yet it's exactly what we're doing with most of the CBDC models that I've seen. Now, there's two issues with the CBDC, right? The first is the government can still print as much money as they did before. But let's put that aside because they're going to do that anyway. All right. And then the second is what is the kind of philosophy of the underlying technology? Because you can implement a CBDC that doesn't monitor people, that doesn't require banks and can do person-to-person transfers, that you can see on an IP address basis, just like Bitcoin and Ethereum, but that don't basically have privacy invading and security evading functionality. The question is, do we have the fortitude, at least in the US and maybe in Western markets, to take that approach? Right now, I would bet that the answer is we don't. And partially it's a function of education, back to your point about the venture capitalists you were presenting to. If they truly understood the nuance of what I'm saying here, I would find it very hard to believe that they wouldn't have the same concerns that we might have.
Yeah, I would agree with that. Okay, so let's talk about sort of the other side of the regulatory crunch that's sort of hitting us right now. So there's a lot of rumors about something called Operation Choke Point afoot within the banking to crypto world, where the idea is that if you're a bank, you rely on the good graces of people like FATF and other banking regulators to continually bless off on you as a good actor, lest you be put on a list with North Korea and Iraq and Iran. And it's very easy to sort of become dirty in their view. All you have to do is touch another bank or another entity that's dirty, and all of a sudden you're dirty too. It's very contagious. Yeah. So there's a very small number of banks right now that will even deal with crypto, and there's been rumors of a chilling, sort of set of edicts coming out of these regulatory bodies, encouraging them to get further away from crypto and, in fact, possibly not handle it at all. So the threat is that all entities that redeem fiat dollars for crypto in one direction and allow you to spend fiat dollars into crypto in the other direction, those banking entities may pull back and stop servicing the crypto universe, at least in the United States. Do you think this is real, first of all? And second of all, if it is real, what do you think the effect is? So, yes, it's real. And I have evidence to back this up, and I can give you the historical context. So under the Obama administration, post-Patriot Act, which is the worst named piece of legislation in history, from a marketing perspective, brilliantly named, from a reality perspective, Orwellian named, yes.
Orwellian named, exactly. So years ago, this is probably 12 years ago now under Obama, there was an effort started by the DOJ and under Obama administration, directives, combined with support from the FDIC and the OCC, basically together the three bodies that would oversee the financial system, more or less. And the directive was set risk policies to your banking constituents that said, if you are dealing with clients in these businesses, firearms, tobacco, remittances, pornography, all legitimate businesses, not legitimate, all legal businesses. Yeah. Okay. Meaning not illegal in any way, including remittances, in which I was running a remittance company at the time. Yeah. That you basically had an obligation to have a different set of oversight on these clients because of all these other potential risks. But they never actually could clearly articulate what the risks were. Never. I had this conversation back then when we had bank accounts shut down and had to play whack-a-mole, moving money around between banks, which makes you feel like a criminal. That's the irony is you're basically running a totally legitimate business. I was running a business helping people move money to Haiti after the earthquake and felt like a criminal. It was insane. That is crazy. What would happen is the banks would get this guidance, never said shut off these accounts. You can't do that, right? Because the businesses were legal. But said, here are the risk guidelines of what you have to do or should do. And what most of them said is, you know what, screw this. It's too much work. It's too hard. And that's exactly what the Obama administration wanted. They wanted these people out of business. They wanted to stop firearm sales. They wanted to stop payday loan vendors and money transfer vendors. They wanted to stop tobacco and all these other companies from having bank accounts. And there's a long list if you just do a Wikipedia search on choke point. When Congress and the Republican Party finally got wind of what was going on, right, they started an investigation. It was considered to be illegal, and they called people to testify, and the edict came down, stop it.
Yeah, it's like discrimination, right? Because it's not illegal.
It's not like, it is.
It is discrimination.
So,
yeah,
exactly. I mean, think about it, right? I mean, look at like I said, I was dealing with taxi drivers in Miami and New York sending money home to their families in Haiti. The poorest country in the world being supported by the poorest people in the United States, 30% of their GDP, and I can't get a bank account to support their, So they were told to stop it. The problem was the damage had been done.
Right. Well, this is what I'm afraid of Gary Gensler doing to us. Right. By the time the vandalism will be so huge.
The damage had been done because all these people that had been hired by the banks had been indoctrinated into this risk perspective.
Yeah.
And unless an edict comes down to say you must bank these companies, they're going to go with the momentum they already have, which is all these risk policies. So since choke point officially ended, nothing has changed in terms of the difficulty of all those businesses I mentioned in creating and sustaining a bank account. And their fees are way higher than any other institution or business coming off the street. Way higher, right? If you're a money transfer business and you go to Wells Fargo today, the last I checked, the onboarding process is $75,000 to $100,000 to get a bank account. That is fucking insane.
That is absurd.
I don't know if it's come down, but that's what it was a couple of years ago when I checked. So the question is, how does this relate to what's happening today? And basically, we've just got the same type of risk guidance from the OCC, from the FDIC, as it relates to crypto. And partially, they leveraged Custodia and Kraken trying to get accounts, master accounts at the Fed to do this. And how they're getting, why there isn't an uproar. There are some congresspeople who are comparing this publicly to choke point, but it's been a small number, less than 10.
Right.
And it's the same thing, except now it's very narrowly focused on our industry, and our meaning like folks that are in the kind of centralized version of managing crypto assets for people. And there's no one right now who's going to have the guts to stand up to them and say, stop it, because of what happened with FTX and Celsius and all this other crap. And so I don't know how much damage is going to be done along the way. But, the fact that we had this momentum where, other banks were looking at Silvergate's progress and saying, oh, we should get into that business. Now because Silvergate basically, had losses, and it looks like Silvergate's going to be fine, by the way. But the message is very clear, right? The bank executive, why are we having this discussion? Stop the crypto crap. That's the discussion that they're probably having right now. I don't know for sure, but I'm pretty sure that that's the nature of the discussion. And that's extremely disappointing. We need an edict, in my humble opinion, from Congress, which says any legitimate business has the right to open a bank account at any bank that services business accounts in this country with no discrimination. If Congress wants to get out of the business of overseeing banks, which they don't, but if they did, then I would be fine for them not to do that and let banks decide for themselves who they want to service. But since we don't live in that society, we need that edict to come down because they're the ones that are creating the risk parameters.
Yeah. Well, the Custodia kerfuffle recently shows that excuse me, if you can't get a master account, then you are a big second class banking citizen, and those people can discriminate against the crypto industry or anyone, frankly. So
I think Custodia wins that case.
Oh God, I think
they win that case. So my understanding, and I'm not a banking lawyer, so I could have this wrong, is that if you have a state charter as a depository institution, meaning the assets you're holding aren't on your balance sheet, and you apply for access to the Fed, they have to give you access. They have to. It's not like we'll figure it out. We'll take a vote. And so there's no leg to stand on for them not to give them access. Meaning if they had opened up a bank to store gold and cotton commodities, they would have gotten the account.
Right.
And it's because it's go back to who's whispering in the ears of who from Congress that wants crypto to disappear, in my opinion, that's saying, trust me, you don't want to do this.
Right. Well, so what do we do? Do we all just become Gensler maxis and move to Dubai? Like what do you think the move is?
I mean, the move is to basically operate within the guidelines of what we know will work today, which really limits retail. Yeah, it really does. Keep fighting the fight to make sure that somehow we get an edict from Congress that says, these legitimate businesses must be bankable in this country, and pray that Custodia wins this fight to be able to integrate crypto into the existing banking system.
Custodia wins, that'll be big. I completely agree with that.
Yeah, look, if they lose, it could be there's some aspect of this law I don't understand. Yeah, but that reeks of corruption to me. If they lose
which there probably is a lot of corruption. So that is my fear.
Yeah.
So let's talk a little bit about ABRA now.
Well, but you did say one thing. I want to address that. Sure. I think, look, I'm neither an apologist for America, nor am I an anarchist. I do love our country, and I think one of our biggest saving graces are the checks and balances we have in our system. Meaning that Gary Gensler or his equivalent, his peers at any of the three-letter agencies that implement laws should not be able to run amok unchecked. And by and large, that system works. It's abused, but the checks and balances are what save us. And I do think, and I do believe that eventually the checks and balances will save us here as well. I do believe that. Sorry, go ahead.
Yeah, no, good to hear. Well, what I want to do is I want to give you a little floor here to talk a bit about ABRA and tell us what's going on today with it. When I first encountered it was I think in 2016 at the launch conference. I think we were just launching then. Wow. It was a very different animal back then, right? I was doing something completely different. But tell me, I don't think you were there yet. Were you? Or were you? I don't remember whether I met you then or not. Do you remember?
I presented at the Launch Festival.
You did? Okay, so it must have been you.
Yeah. I just looked a lot younger because I didn't have to deal with all these regulators.
Yeah, I had hair. You're not alone.
So right. So we started ABRA as basically a way to use Bitcoin and crypto as a remittance vehicle to send money around, because that was the space I was working in. And we quickly realized that was way too early. And a lot of people loved our app and were simply using it as a way to buy Bitcoin and either send the Bitcoin, mostly hold the Bitcoin, and then we added Ethereum and a bunch of other crypto assets, and quickly morphed into a super trivial way to buy, sell, hold, exchange across a bunch of different cryptocurrencies. And we ended up with very little marketing, hundreds of thousands of people doing this around the world. And now on the retail side, I think we've got about 3 million, just approaching 3 million users. And again, we've never really spent money on marketing as a company. And we've evolved since then also to have an institutional arm and a private banking arm. Private banking basically services high net worth banking clients for crypto. I kind of liken it to First Republic for crypto. You get named account manager, high quality service, access to over the counter trading, better spreads on large orders, ability to borrow against holdings at better rates, custom yield products that we don't offer to retail, things like that. And then on the institutional side, we've got an OTC desk. We basically run a prime business where you can borrow. We work mostly with TradFi firms now there, traditional finance firms who are in the crypto space, who need to borrow, but on a collateralized basis. And the businesses all service each other. We have a lot of clients who use ABRA to move large amounts of money around. So we'll help them get set up with Tether or USDC to be able to move money into other markets, to be able to store dollars and earn yield. So we almost act as an advisor for how to do crypto-based banking, either for moving money around, earning yield, hedging positions if you're a miner, stuff like that. So we have this full gamut now of services, financial services for crypto, ranging from just buy and hold to very sophisticated prime services.
And do you service? I've noticed when I went to your website recently, it appeared to me to be largely geared, and I think you just kind of said this, towards accredited investors and big institutions, as opposed to not accredited little retail people. Is that true or not?
Partially, but mostly not, I would say. So anybody can download the ABRA app, anyone on the planet who's not in a sanctioned country. There's a few exceptions like Canada and UK we don't support right now for yield. But by and large, any country in the world, you can register and you can buy crypto using your bank account, your credit card. We support dozens of banking types, different countries around the world, and it's pure retail. On the yield side, where you earn yield by either staking or lending, in the US, that's a security offering, and so we only support accredited investors through the exemption there. Outside the US, it's open in all the markets we support. We consider that a lending activity in those markets because the US looks at it differently, as we've seen. Whether we agree with it or not doesn't really matter. And then we have our lending business where you can borrow against crypto for retail. That's live in most states in the U.S., like 47 states, and dozens of countries. And it's a very popular service. And if you go down to like a 15% LTV, loan to value ratio, you can actually borrow for 0% interest, meaning you're posting a fair amount of collateral. And it's very popular. And so that's all retail. And we have similar offerings on the high end for institutional and high net worth clients. They're just not offered through like the app. They're much bigger amounts. Rates are customized. You might have terms on yield products to get better rates, things like that.
Got it. All right, Bill. Well, look, our time is up, unfortunately, but this has been awesome, and I just want to thank you again for coming on the show. Bill Barhydt of ABRA. Go download his app right now. And my name is Mark Jeffrey, and this has been Hash Rate, and we'll see you all next time.